Alberta natural gas prices have been posting a recovery over the past month, and that's going to come much to the relief of producers in the basin, such as Birchcliff Energy. We're joined by Jeff Tonken, President and CEO. Great to see you.
Good morning. Thanks for having me.
You're about 75–80% natural gas, so you're happy to see any recovery in the AECO price.
Absolutely. Natural gas is important to us. So we've seen a really strong recovery recently. Two reasons. One, it's starting to get cold. Notwithstanding it's nice in Toronto today, it is bitterly cold in Alberta and Saskatchewan and in the south. So weather drives gas prices. Second thing is we've changed the way we handle our natural gas in Western Canada, TC Energy specifically, and that's allowed the people who buy gas for gas storage to get back into that game so we can put gas into storage, which creates a floor for energy, and at the same time, we have cold weather.
So we're talking about the NGTL system. It's the backbone of gas transport in Western Canada. Just remind us, I know it gets a bit complicated, but what was the change that was made, Jeff?
So this is a 25-minute answer in 2 seconds.
Okay.
The answer is this. Under the old regime, you had to have fixed transportation. You had to have interruptible transportation available to put gas into storage. That was not available. Now, we've changed the way we essentially calculate the way gas moves, and we have interruptible storage available to interruptible transportation to put gas into storage. So that provides a bid. When it's warm in the summer, we have gas, people buying gas and putting it into storage, which creates the floor. We did not have that before. But because we did not have that over the last couple of years, we have very low gas in storage right now. And so it sets up when you have very low gas in storage and it starts to get cold and you see cutbacks overall in our industry, gas becomes a premium commodity and we're seeing the price move. As an example, today, I think for 2012 or 2020, is it that late? 2020? Where'd that go? 2020, we're seeing gas for that year, you could hedge it all at $1.87, which is a big price considering last year we only got $2.10 just for the winter months and zero in some months in the summer. So it's a big, big move.
I mean, I know we can't get too technical here, but was the problem previously that people just couldn't put gas into storage, so they were forced to sell it at rock bottom prices?
That's a simplistic answer, but yes, and that's just over the summer, and it's just when we are working on the pipeline. So when there's pipeline maintenance, we now have the ability to provide interruptible service, which allows people who want to put gas into storage, they can do that. Gas storage is unregulated, and hence it has to have interruptible service. Up to this point, there was no interruptible service. I put it in these simple terms. If we allow 1,000 cars on the 401 and there's an accident on the 401 at, call it Yonge and the 401, everything west of the 401, although there's no cars on it, and they're all behind, backed up, we did not allow any other cars on there. Now we say, okay, if there's an accident at Yonge, we're still going to allow more cars, i.e. we're going to allow more transportation to the south or to the west, and that allows gas then to come onto the system and it can go into storage.
Looking at Birchcliff, I mean, you, like the other natural gas producers, have seen your stock hammered.
Hammered, killed, murdered, ravaged. So although you're laughing and I'm telling jokes about it.
It's not a serious situation.
No, it is really serious. But I tell our staff, I tell our shareholders, there's two things going on here. Our business is so strong. It has never been healthier. We meet all of our consensus estimates, and the company is doing very well. The energy industry and the ability for us to attract investors is a completely different story. But the company is doing very strong. We're generating excessive amounts of free cash flow, and we intend to generate more cash flow by driving our costs down and filling up our infrastructure. So the business is great. The question of attracting investor confidence and investors into the stock is a different matter.
I mean, back in August, Canaccord was estimating that you'll post almost $1.30 in cash flow per share this year and almost $1.30 next year. So
yeah, I hope my wife's not watching, because she says, well, what are you doing down there? And the answer is we'll hit our estimates. The question is, how do we attract new investment? And that's a whole nother issue for a different time. But gas prices are strong. And when you're a gas producer and being a low-cost producer, your business is strong.
How much of your production is exposed to the AECO price in Alberta?
Well, about a third. We move a third of our gas in Alberta, a third of our gas at Dawn, and a third of our gas at Henry Hub. Mm-hmm. And so what happens is, today is a perfect example. I think the price of spot AECO gas is $2.80 this morning. So what we do is we just pay the transportation costs, say to Henry Hub, just pay those costs, but sell it at AECO because we're getting a better return. Although you'll see this morning, price of Henry Hub is up by 13 cents, a huge move. Mm-hmm. The biggest move I think we've seen in 6 months. So gas prices are strong, and it's all from one thing: weather, weather, weather. And in the central part of the U.S., it's cold, and that drives gas demand.
What about oversupply, though? Because isn't there a risk? I mean, Western Canada, as you know, has seen this huge rise in production. Isn't this stronger AECO price, isn't there a risk it'll just bring on fresh production?
Always. So that's why you want to be the lowest cost producer. But unlike other years, Andrew, mm-hmm. today we have low storage. So now we can do two things. If the price starts to fall, people will put gas into storage and sell it at a higher price. Today, because there's very low storage, people are buying gas today at, call it $2.80, in anticipation, they're putting that in storage, in anticipation that the winter months are even going to be better. And it's because we have a lack of storage, and we have an estimate of cold weather this winter. So when you have those two things, we have the final situation where people buy gas now at a higher price, think it's going to be even higher in the winter months. It's interesting. There was an article also this morning that the market players, so people who have nothing to do with natural gas, have been shorting gas stocks and shorting gas futures. And all of a sudden, gas starts to move, the shorts cover, and then it runs the other way. And of course, our goal is to make sure those shorts have a miserable life, and it's setting up to have them cover, which spikes it the other way.
We've only 20 seconds left, Jeff, and I'm sorry about that, but your stock is barely above $2.
It is.
Canaccord estimated in August that you could have cash flow of about $1.29 this year. I mean, is that plausible?
Oh yeah, we think we're going to have free cash flow of roughly $100 million, and of that this year, and of that we took $40 million and did an acquisition with that free cash flow. We pay a dividend of $27 million or 11 cents a share. So the top natural gas producers, like ourselves, find themselves in a position where we are creating real value, and the shares don't reflect that. But ultimately, the market takes care of itself.
Jeff, thank you very much indeed.
It's a pleasure being here.
That's the boss of Birchcliff Energy, Jeff Tonken.